Hello and welcome to the next episode of Sip Easy. Every mutual fund communication has a disclaimer that they are subject to market risks. And we have been talking of how SIPs are retail investors' best friend. But are SIPs risk-free as well? Let's first understand that no investment is 100% risk-free. There is always some degree of risks involved. Yes, even the traditional instruments carry some degree of risk. When it comes to SIPs, you need to first understand that SIP is merely a tool that helps you invest certain amount in schemes of mutual funds at periodic intervals. But that doesn't assure you that your investment will keep on growing and you may face losses when the value of scheme's portfolio goes down. What SIP does is that it takes advantage of markets' ups and downs by investing regularly and adding more units to your investments when markets go down. Hence, if you invest for the long term, you will see multiple such cycles of markets going up and down. And SIPs help you benefit by reducing the average cost over the long term. Add to this the fact that mutual funds provide you the advantage of diversification by investing in multiple instruments or stocks in a single scheme and diversify the risk as well. So remember to start early and continue your investment journey for the long term to minimize the risks. Because SIP bhi zindagi ki tarah hai. Stay focused on your goals and improve your chances of achieving them. So when are you starting aapki zindagi ke liye SIP? To know more, subscribe to our channel now. An investor education and awareness initiative by HDFC Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.